Hi everyone, welcome to this monthly webinar. It's 11:30 here in Melbourne, so let's get started. We usually do this a monthly webinar where we take Q&As. And just as an introduction to Apollo Capital as well, I'm the CIO of Apollo Capital, Henrik Andersson, and we run a crypto fund here in Melbourne. We call it the Australia's premier crypto fund. We manage a portfolio of crypto assets, and we invest for the long term. It's an open-ended fund with liquidity, monthly liquidity, and we've been running the fund since February of this year. So in this webinar, I was planning to talk about a little bit about the news flow, the recent news flow, talk a little bit about the performance of different crypto assets, and then what we usually do in these webinars is that we take questions. So there should be a little chat window next to this video where you can ask any questions you like. So again, I'm the CIO of Apollo Capital. It's a wholesale fund open to Australian investors. And it's been another month with a lot of news flow, and I think mainly positive news, so really very exciting stuff. We also have been really busy. We've been traveling to Singapore, the blockchain week there. We've been to Malaysia, to Hong Kong as well, and met with many of the industry players, and hopefully you've seen our updates from those trips. Also, I want to mention that we just published last week our investment thesis on our website, and you can access that under the About tab on our website. So please check that out. It's a 20-page document, but I don't think it will take too long to read. And I think we put down some interesting thoughts in that document, and it describes our investment process, where we invest, and what we believe the development in the crypto markets will look like as it develop further. With that said, let's talk a little bit about the recent news flows. Yes, the last few weeks has been really interesting in the crypto markets. For years we have talked about Wall Street entering the crypto markets. We have not really seen that happening, and our thesis has been that there are a few building blocks missing for that to happen. Firstly is access to the market, and that was one of the main reasons why we set up our fund, to give wholesale investors in Australia access to the crypto markets, because it's not easy to get access and to manage a portfolio, and one of the reasons is the custody of these assets. So you need to safely secure and take custody of these assets, and that's what we do at Apollo Capital. But I think some of the recent news flows has been really material in this aspect as well. We had the first qualified custodian in the US last month, which was BitGo. But I think even more importantly, actually this week we got the news that Fidelity is entering the market, and that's, I think, is fantastic news. Fidelity is a $7.2 trillion asset manager. It's the third or fourth largest asset manager in the world, and they've been involved in the crypto market for some time, but more passive. Now they are actually launching a new company that is called Fidelity Digital Asset Custody. It's called Fidelity Digital Asset, and they will do custody and trade execution for their clients. So I think this is really big news. One of the biggest players in the world. They are the size of BlackRock when it comes to their earnings and growth. And this has been driven from the very top of Fidelity. Abigail Johnson, the CEO of Fidelity, has been driving this crypto kind of their crypto interests from 2013, 2014. They started experimenting with mining Bitcoin. They integrated with Coinbase earlier, but now they're starting something themselves. and one important piece of that will be just custody of crypto assets. And that means that other institutions that trust a player like Fidelity, one of the largest financial institutions in the world, they can safely store their assets, their crypto assets with Fidelity. They can use them for trade execution. Fidelity will work with some trusted exchanges to buy cryptocurrencies for their clients at the best possible prices. And looking at Fidelity, it's a company that has 70 million retail accounts around the world. They have 27 million brokerage accounts, etc. So a really big player is entering the market, and I think that's just tremendous. And probably the biggest news of this year, together with the announcement from ICE earlier that they are opening a crypto platform. And again, ICE is the owner of New York Stock Exchange. They are going to open the platform hopefully next month. So in November, they recently announced that they hired a senior person from Coinbase to be the COO of Bakkt. And what they are going to do is they are going to provide first Bitcoin future, and they are also going to provide warehousing of digital assets. And I think this news is so important because the traditional financial institutions, they already have their lines to these traditional financial players. It's these players that they trust today as counterparties, and now they can have access to the crypto markets to these players like ICE through Fidelity. So really important, and I think this is actually Wall Street entering the market. So I know these Wall Street players have made their moves. They have taken board level decisions to enter this market. They're here to stay. If they don't mind that prices are down this year, they're not looking at this in the short term. They're here. They're investing for the long term, opening these new companies, these new platforms. So I think this is fantastic news. And then after that, we might see more institutional capital entering the market. And it seems like the first kind of institutional capital to enter the market, it's coming from the big US university endowments. And these are some of the most trusted names when it comes to investing in private equity and being very long term. So the last couple of weeks, we've seen big news on that front as well. So we had first, it was announced that Yale University, they managed a $30 billion endowment. They invested in a crypto fund. And then the next day, it was followed on by a range of universities. It was revealed that they have invested in crypto funds as well. So not only Yale, but also MIT, Stanford, Harvard, etc., all invested in crypto funds that invest in cryptocurrencies. So they see the potential, and these endowments are some of the most trusted investment managers in the world. The Yale endowment, as I mentioned, is a $30 billion fund. The Harvard, and that's the second largest in the US. The largest in the US is Harvard, and they're 40 billion. So they're investing a small percentage in crypto funds because they obviously see the potential in this market going forward. So I think that's tremendous news the last few weeks. The US endowments, the Fidelity, Bakkt, which is launched by ICE and New York Stock Exchange, is coming to market next month. Maybe the next institution or the next instrument we will see will be an ETF. That's far from certain, but I think there's a good probability that even within 6 months we might have an ETF. The ETF application with with the highest probability to get approved by the SEC, we believe, is the Solidex VanEck application, and the SEC needs to make a decision on that application before the end of February. So I think all of this together paint a very good picture, we believe. And if you combine that with prices being down 70-80% this year, I think we're set in a pretty good position to invest some assets. So when we look at our portfolio, we have taken down the cash position to around 5% or so, and that is the lowest cash position we have had since we started the fund in February. So that reflects our bullish view on these markets. So we believe this could be a good time to invest some funds in the crypto markets if you believe that they are here to stay, and you believe that the overall market can grow from where it is today. So currently our portfolio consists of around 76% liquid crypto assets. We have 5% cash, and the rest 80-90% is in ICOs. So that's what it looks like today, and that's kind of like the fundamental news around the crypto ecosystem. But of course, we are looking very closely at what is happening in the crypto markets themselves and what teams are actually building as well. So that's something we're very excited about as well, and we are obviously following that very closely. We think one area that is really interesting is these new protocols that are building a new open financial system. I wrote a Medium post about rebuilding the financial system from the ground up, and right now we are seeing some of these protocols coming to life. A few weeks ago, Compound was launched. You might have seen that. We were one of the launch partners for Compound. They're doing borrowing and assets of crypto assets. But our vision for the crypto markets is that all the world's assets will be built on top of open blockchains. So one day we will have tokens representing real estate, equities, bonds, commodities, all kind of assets. So we see a future when these open protocols will support all kind of assets. But today they're launching with things like Ethereum and other ERC20 tokens that you can borrow and lend on an open network that anyone can have access to. It's just smart contracts built on open source software code. And these are protocols that other people can build financial infrastructure on top of. So Compound is one of them. Dharma is another one. They're doing more a peer-to-peer model versus Compound. Compound is doing more of a liquidity pool. Another one is called DYDX. They just launched 2 weeks ago as well. They're doing financial derivatives with smart contracts. So if you think about it, there are no financial institutions behind the protocols that they're building. It's just a piece of software, and that creates an open financial system that anyone can access because it's built on open blockchains that are trustless, meaning we only have to trust the code. They are censorship resistant, and they're permissionless, meaning that anyone in the world can access these new services being built. Another one of those projects is 0x. They are trying to do trustless trading with anyone in the world. So we can use this technology to trade with anyone in the world, and we don't have to give up custody of our assets. We think that's tremendously powerful. So that's one area we are excited about, and there are a lot of activity happening in that area right now, and all these projects have basically been launched in the last couple of months. And then we are excited to see what kind of user interfaces that are built on top of these kind of services. Another piece of news we got this morning was from the Decred team. They have launched their new platform. They are have 21 million US dollar in the treasury, and now they're handing over control of um, that money to the community, to the token holders in Decred. Um, so they are decentralized the system. They are working on a voting system, um, and creating a kind of a decentralized economy around Decred, and is one of the most advanced voting community systems out there, we believe, and something we are pretty excited about. We own Decred in our portfolio. We also own 0x, that I talked about before. So that's some of the things happening in the crypto markets themselves. I also wanted to mention before we go to Q&A, and make sure that you put in your questions for us to answer if you have any questions. But before we do the Q&A, I just want to mention a little about the prices this year in the crypto markets. So I looked a little bit about the performance of different crypto assets, and I just want to run through that, and give a little bit of comments on that. So we launched on February 1st. Bitcoin was about 10,000 at the time. It's around 65,000, and this is US dollar. It's down 33%. And Bitcoin has actually performed much better than most crypto assets this year. It's seen as a low beta crypto asset, a little bit safer than other crypto assets, even though Bitcoin itself is very volatile itself. If you look at something like Bitcoin Cash, it's down 67%. So it's down another, if something is down 33% and it goes down another 50%, that's where we are. So it's performed much worse. Ethereum is down 80% since February 1st. So a big decline in ETH and Ethereum. We have been quite cautious on Ethereum. I would say we've been long Ethereum, because we think there's a lot of activity happening on that platform. But we are being cautious for mainly one reason. That is that we believe the ICO market was overhyped last year, and we believe a lot of the buying pressure for ETH was fueled by the ICO market. So when the ICO market cools down, we thought that the demand for Ethereum would also decrease. And I think that's why Ethereum is down so much this year. Maybe at these levels, it's becoming more interesting. XRP is also one of the large cap crypto assets that are down a lot. Ethereum, XRP is down 60% since the beginning of this year. It has had a very good performance though the last 90 and 30 days. They made an announcement recently about XRapid, which they are launching. EOS is down 50% since February 1st. In that time, they have launched their platform. We hold a little bit of EOS in our portfolio. It's one of the platforms that people are building dApps on top of. If you look at the last 90 days, one of the best performing crypto assets is Maker. That's a crypto asset we have in our portfolio that we are very excited about. You might have seen recently that Andreessen Horowitz Crypto Fund bought 6% of all Maker. Maker is a platform supporting a stable coin called DAI. There is a lot of activity in the stablecoin area, and that is one area we have exposure to and we are quite excited about. Another good performer in the last 90 days is Nano, and it's about flat in the last 90 days. BTC is down 9%. It's done much better the last 3 months than many other crypto assets we own in our portfolio, Maker, Nano, and BTC. The last 30 days, Maker is actually up 64%. In that time frame, you got the announcement from Andreessen Horowitz Crypto Fund that they purchased 6% of Maker. You also have had the volatility around Tether recently, just the last few days, I would say. Tether has broken its peg, is trading at 97, 98 cents at the moment. So there is this rush to find a better stablecoin in the market right now. 0x is one of the best performers the last 30 days as well. 0x we have in our portfolio. As I mentioned, they're providing a protocol for that will enable trading with anyone in the world, a decentralized platform for trading. If you look at the overall market since February 1st, the market cap was around $511 billion when we launched the fund. I would say the last 2 or 3 months it's been going more or less sideways. A month ago, the overall market cap, looking at CoinMarketCap, reached $189 billion. Today we're at $212 billion, I believe. We've been going back and forth around $200 to $250 billion for the last month or so. So we're seeing this pattern where we are flattening out. The volatility has come down a lot in the market as well. We have had this good news. We think this is a pretty exciting setup for the market. And with that, I think we'll go to Q&A. So if you have any questions, please put them in the chat, and I'll do my best to answer. So I'll just going to look here what questions we got so far. How do you see the stablecoin market develop over the next few months? So that's a super interesting question for us. So as I said, we've seen a lot of activity and funding in this area. I think we can divide the space maybe in 3 different types or main categories of stablecoins. There are fiat-backed stablecoins like Tether. There are new ones coming out as well, like True USD. We have a position in the Trust token, which is backing real-world assets like True USD. We have crypto-backed stablecoins like Maker and DAI. We have a position in Maker. So we try to build a diversified portfolio around these different technologies. It's hard to know which one will win out in the end, but we need to build a diversified portfolio around the best technologies and the teams that have the best probability of winning out in the end. So that's fiat-backed and crypto-backed. We also have a lot of innovation in algorithmic backed stablecoins. We don't have a position in any one of them yet. The most high-profile one so far is probably Basis. They got over $100 million in funding earlier this year, and they have a different model that is untested, I would say, and we will see how well it performs, but we are definitely excited to see it launch maybe later this year or next year. They have a 3-token model with a stablecoin with something they call bonds and shares as well, and that is backing the algo-based stablecoin Basis. Let me see if there are any other questions. So we got one question from Adrian. And the question is, my question is, we tend to obtain a lot of information in the media regarding the large American institutions and what is happening there. Are you aware of any new developments or what is happening in the East, especially since the Asian countries such as Japan, South Korea, who have such a higher rate of adoption of cryptocurrencies? So that's a really good question. this news is mainly coming from the US. Maybe the US institutions are ahead of the pack here. That's my theory, at least. Uh, Places like Australia, Europe will follow these well-regarded institutions like the Yale Endowment and others. No one wants to be last, but no one wants to be first either. Now we are seeing the first movers, and I think others will follow very quickly. So I think that's the pattern. People are very careful of being first to do anything because there's big reputational risk. People don't want to be, or corporations don't want to be last either. So once we have the first movers, others will follow very, very quickly. Places just like Japan and South Korea, adoption is high. South Korea, it feels like everyone owns some cryptocurrencies, um, and the community there, from the grassroots, I think, have been really strong. In Japan, um, I think has been fairly friendly to crypto assets as well. We have seen some big institutions in Japan, especially, embracing this. We have seen some large corporation, stock listed companies entering the mining space. We've also seen some big banks doing things. So we have seen Nomura um, working with Ledger to launch institutional custody. So we're definitely seeing activity in the East as well, in countries like Japan. China, I think, is more uncertain. They banned centralized cryptocurrency exchanges, um, but I think there are a lot of activity in this space in China as well. Blockchain is something that there is a lot of focus on in China. And if you look at the patents, for example, half of all the blockchain patents last year came from China. So a lot of activity in the East. A lot of our investments are based in places like Singapore, and they have a very vibrant crypto community in Singapore and Hong Kong, where we've been the last few weeks. Any rivals in the ETH in the platform world? So that's really interesting. Right now, a lot of the projects are building on top of Ethereum, and that makes it easier as well for others to build on top of Ethereum, because you have these fundamental building blocks already being built on Ethereum. On the other hand, Ethereum suffers from a few things. One is it seems to be hard to write secure smart contracts on top of Ethereum. Another one is scalability. Ethereum might be able to support 15 transactions per second. That is not going to work if we are going to scale this to a billion people. So what needs to be happen is either that we come up with second layer solutions like sidechains or Plasma or the Lightning Network on Bitcoin that can handle much more traffic. So there's a lot of work on that. Vitalik and the Ethereum developers are working on scaling the core protocol as well, and they're working on a few different methods. Casper is one, going over to more a hybrid proof of stake system. They are working on sharding, splitting up the database because it's growing so quickly. So there are some solutions for Ethereum, but there are obviously some competitors as well. One I'm very excited about is Definity, which we invested in. We expect them to launch towards the end of this year or early next year. And we think they are interesting because Definity, we think, optimize both across throughput and being decentralized. So traditionally, there have been very clear trade-off between being decentralized and, and throughput and scalability. But I think Definity has a system in place because they're using a new type of cryptography to achieve good optimizations across those parameters. So I think that's one we're excited about. Another question, Bitcoin is still so expensive. Why is now a good time to invest? I think it's all relative. When Bitcoin went up to $100, people said, "Oh, it's so expensive." It was at $1. When it went up to $1,000, people thought, "Well, it's way too expensive." And same thing at $10,000. I think now you have more people in the crypto ecosystem than ever before. Some of the largest institutions in the world entering the space. Prices are down quite a bit. It's hard to predict where prices will go. Bitcoin is volatile. But for us, Bitcoin is first and foremost a form of hard money, a form of store of value, and a very hard, secure, decentralized consensus that you can build other things on top of. And if we think that Bitcoin is a form of digital gold, maybe, then we can compare it to something like the value of all gold in the world, which is in the range of $10 trillion. And Bitcoin is very far from that. I believe it's maybe at $115 billion. So if Bitcoin is successful, we believe that it will be able to take a part of the market cap of something like gold. And if that's true, then the upside in Bitcoin is still very big. So that's our view. Let's see if there